Hi, I'm Kristen King from the Investing Channel, and you're watching Smart Money, the show that gives you the inside edge on the bets that the movers and shakers on Wall Street are placing. We may be in August, which is traditionally the quietest month of the year for financial markets, but insider traders have remained active over the last week. Once again, sellers have outweighed buyers, both in terms of the number and size of their transactions. The biggest deal was made by GE, which sold 53.72 million shares in oil services business Baker Hughes at $23.26, a trade that raised $1.254 billion for the industrial conglomerate. Beverage and snacks group Mondelez International sold 14.7 million shares in Keurig Dr. Pepper at $34 a throw, raising a fraction over $500 million as it did so. Other notable sales were made by Soon Wang, the president and CEO of NVIDIA, who disposed of 400,000 shares in the graphics chip maker at $197.14 to realize $78.85 million. Whilst Kevin Johnson, president and CEO of Starbucks Corporation, sold just over 359,000 shares in the coffee shop chain at $122.81 per share in a deal worth a cool $44.11 million. We also saw foundations associated with blue chip companies selling down their holdings. The MasterCard Foundation sold 394,865 shares in MasterCard at an average price around $383.83. Those sales generated proceeds of $151.563 million. The Lilly Endowment sold 236,542 shares of Eli Lilly at a price of $256.12 for a consideration of $60.58 million. However, the insider trading activity that caught our eye this week came from NASDAQ-listed Align Technology, a medical device business that manufactures and distributes orthodontic equipment and digital services that help dentists achieve high-end results. Align Technologies operates on a global basis with annual sales around $2.47 billion and a market cap of $55 billion. The company employs some 20,000 staff and is active in more than 100 markets across North and South America, Europe, the Middle East, Africa, and Asia. Align enjoys very high gross margins, which were running at 75.7% in Q1 2021 and has operating margins of 25.2% and net margins of 12.98%. As such, it is a very highly rated growth stock trading on PE of 77 times, a price to sales multiple of 21.67, and a price to book value of almost 16 times. To some extent, the business justifies that lofty rating by delivering a return on equity of 21.42% and a return on assets of 14.17% per annum. Sales at the business have grown by 23.9% over the last 5 years, and earnings per share are forecast to grow by an impressive 31.58% over the next 5 years. Wall Street views the stock as a buy. In fact, 10 out of the 11 analysts who cover it rate Align Technology as a strong buy, with price targets as high as $790. Turning to the price action of Align Technology stock, in the last 3 months, the shares have risen by 24.33% and are up by 32.45% over the year to date. The stock has made 17 new highs in the last quarter and 3 in the last week alone, the latest of which was at $714.50, which was also a new 10-year high. That strong price momentum means that Align Technology scores very highly on technical screens over short, medium, and long term. In fact, there's very little to dislike about Align Technology at all based on its current and anticipated performance, which makes it all the more surprising that we have seen 6 key insiders selling stock. Over the last week, 3 directors, the CEO, and senior vice presidents of HR and global operations all sold stock in the company. The largest sale was made by Joseph Hogan, the CEO, who disposed of 66,667 shares at $699.54, raising $46.63 million. The other 5 insiders sold a combined 28,190 shares for a total of almost $19.86 million at prices ranging between $701.34 to $707.34. In fact, if we look back over the last 12 months, insiders in the company have regularly sold stock or exercised share options over it, despite the share price heading higher almost continuously over that period. It seems to us that someone has got it wrong. Is the market overvaluing Align Technology and its ability to grow sales and maintain its margins? Or are the C-suite at the company undervaluing the business that they manage and have a stake in? Far be it from us to suggest that directors and senior officers of Align Technology don't understand their own business, but perhaps they don't appreciate just how keen investors are to own an asset with these characteristics. That's all we have time for today. Always make sure you do your own due diligence before making any investment decisions.